Hey everybody, welcome back to the channel. Today we are looking at the $250,000 paper portfolio of GW versus QYLD. Now, for those of you new here, I am going to link a playlist up above and down below so where you can figure out, or so you can go back and look and see what a covered call is, because I described that in one video, and just follow along as how this portfolio has progressed over the months. But essentially what I'm trying to do is take $250,000 in a paper portfolio and see if I can generate $2,500 per month, each and every month, doing covered calls against a select portfolio of stocks that I assembled. And I want to track that against QYLD and see if QYLD will consistently give $2,500 per month as well. So if you're new here, please subscribe, share, comment, like, hit the notification bell, do all that good stuff. If you like the work that I put in here and you would like to give me a little tip, there's an Amazon link down below. If you can use that Amazon link and go shop for whatever it is that you normally shop for, as long as you use that link, it'll send me a small little commission on qualified purchases, and that would be so awesome. All right, so let's just get into it. This month was a challenge, and well, we'll just go through it and take a look. So this is a screenshot of last month, Friday the 21st. Option contracts expired, and so I did have one stock called away. So what that means is that when I sold the cover call contract, I sold it at a certain price, at a strike price. If at close of business Friday, when the option expires, if the stock price is at that strike or above, you will have to sell all your shares that you have under contract at that strike price. So here we'll see in red, PPL Utilities got called away at $28, so that put $16,800 in the bank. And I had to go out and either buy more PPL Utility or distribute it among other stocks. And that's where the new covered call portfolio comes in. And I changed its colors up just a little bit because I knew it could be kind of hard to follow. I don't know. You let me know if it's ugly or whatever. But what we're looking at is the PPL. I went ahead and bought 300 shares back of PPL Utilities. And then I increased, let me see if I can split this screen here. Can I? Come on. Ah, there we go. Nope, won't let me do it. Doggone it. How about there? There we go. Where'd it go? There we go. So there's the screenshot. What did I add? I added another 100 shares into USB Bank Corp, which brought my let me just get rid of these. We don't need them anymore. I bought another 100 shares of USB Bank Corp, which brought my average price down, my cost basis down a little bit. And then I added another 100 shares of Cisco Systems, which also brought my cost basis down. So I added 300 shares of PPL, 100 shares of Cisco, and 100 shares of USB Bank Corp. So what that did was it actually lowered my dividend average just a little bit, not very much. So what I've noticed is call income or option premium have gotten really cut down, and I think it's because as this market has run up, people are getting a little bit nervous at the top. So your option premiums have been cut a little bit, and on some of these stocks, I really probably shouldn't even sold a contract at all. Like for instance, AT&T with a $33 strike price, I got income of $5 per contract. So that's have 500 shares, so 5 contracts at $25. Verizon, $63 strike, got you $6. 2 contracts there at $12. Eastman Chemical, strike price of $80, got you $18 per contract. That's 2 of those for $36. ADM with a 47 strike, got you $17. 2 contracts is $34. 63 strike on Cisco Foods, got you $72. That one was a good one. 2 contracts on that was $144. Coca-Cola with a $50 strike, got you $17. 2 contracts on that for $34. Mo or Altria got you a $48 strike with a $6 per contract for 3 contracts for $18. $45 strike on ExxonMobil, got $45 for that 1 contract. $80 strike on CM, which is a Canadian Imperial Bank. That's a $25 for that one. $41 strike on US Bank Corp, $15 per contract on that one. 3 contracts for $45. $73 strike on Gilead Sciences, $15 per contract, just 1 contract there. Pfizer with a $40 strike, 36 per contract, got 2 contracts there at 72. Walgreens Boots, $44 strike at $15 a contract, 2 of those made $30. 3M, $180 strike on that, made $20 on that 1 contract. Leggett and Platt, a $45 strike price on that, got $32. 3 contracts for $96 total. WP Carey, $75 strike, $72 income for that one. 2 of those, that was pretty good for $144. IBM, $135 strike, $30 contract, 1 contract on that one, so just $30. Cisco Systems, $46 contract, $9 a contract times 3 contracts, that's $27. Southern Company, $58 strike, $5 contract, 3 of those for $15. PPL, $32 strike, $5 per contract, 3 contracts for $15. So all we came out with was $882 of call option premium for the month of August. So if you add that monthly average of the dividend of $880, you can see I have an income need of $2,500 per month, and we ended up getting $1,762 off of the portfolio. So what do we have to do? Well, we have to withdraw cash from our cash position to make up the difference. So $738 is going to be deducted from here. I already did the math from the cash position. I also forgot to mention the PPL shares that were called away left me with $485 after I had bought more PPL, Cisco, and US Bank. So that got added to the cash position, but we had to withdraw $738 to bring our total income to $2,500 for the month. So that's how the covered call thing went this month. You know, not bad. I mean, I had to withdraw $738 for the month from our cash position. So how did QYLD do? Well, QYLD actually did great. It had a dividend declared, and it was a 2.6% increase, I do believe, of 22 cents. If you recall from last time, I had $184.93, and I had increased, I had reinvested those shares. So I think I added 9 shares roughly. And so that, with the 22-cent dividend, I was able to pull out $2,695.22 off of $250,000 in QYLD. And those share counts will grow as if the income is over $2,500 per month. So what I'll do is I'll end up taking that $195.22 and adding more shares, and hopefully that keeps the income increasing. That's what we would like to see with QYLD for sure. So this month, QYLD knocked it out of the park. GW took it on the chin a little bit. Not too bad. But someone else also asked me about taxes. Taxes, with the way I'm doing it on the GW side, could be an issue. Okay, because especially if shares get called away. So what I'm trying to do is not have shares called away. That would be ideal. But if you have shares called away, that could increase your short-term capital gains depending upon how long you've owned the stock. And also covered call options could be taxed as well depending upon how much you've done. So I got an income tax calculator and I wanted to check it out. It's just H&R Block tax calculator, and I'll leave a link down below. But we'll just go through this real quick, and I'll just put a scenario that I think might happen with us. So we're married, me and my wife. Do I plan to file with your spouse? Yes. I'm going to say we are 55. Spouse is 55. Do you have your W-2 on hands? I'm going to say no, because I'm going to assume we're retired and we're not earning W-2 money. And I'm going to put 0 there. No tax withholdings. Let's see, what else? Enter your federal withholdings. None. Let's see, and then we'll go to refine. Do you have dependents? No. Then we'll click on investments. And interest income earned, I'm going to say 0, because I'm going to just assume that all that's in cash. Go to next. And qualified dividends, that would be these here. So we'll say we have $10,560 in qualified dividends. We'll have no ordinary dividends. Net income will say 0. And then capital gains or losses, the money you make when you sell assets like real estate or investment property is your capital gain. The money you lose is a capital loss. Held 1 year or less, we're going to say, this is your short-term capital gain. So your investment income, your shares that are called away, if you held them 1 year or less. And let's just say you generated $24,000. Let's see, if I had 10,000, yeah, so that's about 35 grand, something like that, because I had 10.5 in qualified dividends. So we'll go 24,000. Whoops, I think that just messed me up. There we go. Am I back? I have shortcut keys, so hitting numbers sometimes messes me up on the video. And we'll go to next, and we'll have all these other education and medical deductions or expenses. We'll just put none of those apply. Hit next. And taxable income, 0. So we had 24,000 of adjusted gross income. Is that right? Where did the the qualified dividends are taxed more favorably. So $24,000 in investments. So let's see. Let's move that up to that qualified dividends. Let's move the short term up to, let's say, 36,000. Let's see if we can make it owe us some money. There we go. So if me and my wife had 10,500 in qualified dividends and we made $36,000 in short-term capital gains, we are looking at owing taxes of $104. Now, if you're single, that'll make a big difference. You'll have to run that. I'll leave the link down below for you to be able to run this through your situation. So that's it. What do you guys think? Give me a comment down below. Sorry if I stumbled through this. I'm kind of tired today and I'm rushing this video out so I can have it out on Tuesday morning when you see this. Leave me a comment down below. Like, share, subscribe, do all that good stuff. You guys have a great rest of your week and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.